So today is the 121st Thought Leadership webinar. And we've been here throughout lockdown and just before it, where we've been examining each week a topic of central interest to the prevention of crime. And the idea of thought leadership is that we critique today in order we get a better type of prevention tomorrow. So we're not trying to solve the world's problems today. We're trying to encourage new thinking, new ideas, debate what's going on and put perspectives for change. And of course, a copy of this webinar goes on the website so it can be referred to forever. Now, this one was inspired by a slightly different route. It was based on a research project Dr. Janice Goldstra-White and myself are doing about the barriers to the mandatory reporting of fraud, find solutions and sharing best practice through ASFE UK chapter and the fraud advisory panel. It's ongoing research. We're about to start a survey actually on this bit of work. And what we thought we would do is we would get 3 experts to come and give their views on this topic. Now, they come at this from different angles. They're involved in different parts of the tackling economic crime sector. And so we're looking forward today to hearing very different thoughts, perhaps they'll be similar, on how we might approach this issue of whether the mandatory reporting of fraud is a good or a bad thing. Is it going to make any difference? Is this the way in which we can begin to be a stepping stone to form best practice for the future? Well, without further ado, what I'm going to do in a second is I'm going to invite our panel to introduce themselves. And then once they've done that, I will invite them to make their opening statement. 3 minutes when they get to say whatever they want to about this topic. And then after that, we'll invite you, the audience, to ask questions. So do encourage you to use the question and answer button at the bottom of your screen. Get your questions in early, and we'll endeavour to incorporate that in the ensuing discussion. So without further ado, let's go and meet our panel. And let's first of all go to Mike. Mike, please introduce yourself.
Good afternoon, Martin. So my name's Mike Haley. I have the privilege of being the Chief Executive Officer of CIFAS, the UK's fraud prevention service. We operate the National Fraud Database and the Internal Fraud Database on behalf of our 600 members. I'm an ex-chair of the government's Joint Fraud Task Force and have 30-year career in fraud, including as a director at the National Fraud Authority.
Thank you very much indeed, Mike. So let's now go to meet Lee. Lee, please introduce yourself.
Hi everyone, Lee Fitzgerald. I'm a non-trustee director with the Fraud Advisory Panel, and in addition to that, the day job is Fraud Risk Strategy Director with Barclays International. I'm a career banker, 30 years experience, mainly in the fraud environment, and hopefully add some value today. Thank you.
Thank you very much indeed, Lee. And now to one of the lead researchers and thinkers in this area. David, please introduce yourself.
Well, that was really funny, Martin. I am not a lead thinker in this area, but I am a lecturer and researcher at the University of Portsmouth. My particular interest is in economic crime, so that covers fraud, bribery, counterfeiting, cartels, money laundering, etc., etc. And currently doing some research in cartels and also into international counterfeiting.
Interesting. Thank you very much indeed. Okay, without further ado then, what we'll do is we'll invite our panelists to make their opening statements, 3 minutes, where they can say whatever they want about this subject matter. And don't forget, if you'd like to ask a question, please get it in early. Use the question and answer button at the bottom of your screen, and we'll endeavour to incorporate it in the ensuing discussion. So let's go first back to Mike. Mike, your opening statement, please.
Thank you very much, Martin. I guess I've got 4 main points I'd like to make, and part of that is looking back into the history. I mentioned I've been around quite a long time, and I was in and around the fraud review back in 2006, I believe, and then at the National Fraud Authority, which was one of the bodies that was created out of the fraud review. The last time the country really looked in depth, I think, about the problems about fraud. And 2 of the other things that came out of the fraud review, apart from the National Fraud Authority, was to have a National Fraud Reporting Centre, the NFRC, and then a National Fraud Intelligence Bureau, from which all the reports of fraud will go to get a picture of the fraud issues that the country was facing. And I think that was about the right questions being asked at the right time. You know, did we have a big enough picture of the fraud issue in the country? And the question at that time was we didn't. There was not a single place where the intelligence and the fraud reports were coming to. And so we've had action fraud since then, and we've had the National Fraud Intelligence Bureau. Action fraud being the name for what was the National Fraud Reporting Centre. So I think it was the right question to be asking then about how do we get a full picture of fraud? But I'm wondering, is it the right question to be asking now? And what have we learned since we've created those National Fraud Reporting Centres? There are now methods to report fraud. Action fraud has tens of thousands, hundreds of thousands of frauds reported to it. There's now more fraud reported perhaps at any other time in my career, but also probably the least investigative and prosecutions going on of fraud. So is mandatory reporting even needed? For me, I think these are linked in some way, that we have more reports and less action. So for many companies, there seems little point in encouraging more fraud reporting when too little action is being taken against the frauds that we already know about. In fact, the company could risk reputational damage, little chance for police investigation to get the stolen funds back or a guilty brought to justice. So would mandatory reporting not just serve to frustrate those who do the right thing and report under any mandatory scheme? I guess my main point is, though, where's our parallel? We have the mandatory reporting of suspicions of money laundering. Have we seen, since that regime has been brought in, that we've had a dent in money laundering? I don't think so. I think that we've created an expensive bureaucracy that in some ways hinders our fight against money laundering, because all the organizations do is try to ensure they reduce their regulatory risks rather than put their effort into better activities to reduce money laundering. My second question perhaps will be around the second point. Where is the fraud reporting gap? Members of CIFAS reporting over 300,000 cases a year of fraud that they suffer with no obligation. And all these cases, around 900 a day, are reported daily to the National Fraud Intelligence Bureau. We want to avoid duplication in creating more bureaucracy that doesn't serve a clear purpose. So we need to understand first, really, what is not being reported, what types of fraud and what types of company are not reporting. And secondly, will collating more reports lead into more action being taken? What's the evidence for that? In fact, the history of the last 10 years is more reports, less action. So what would I prefer, perhaps? What should that question be? And you'll know, Martin, this is one of my favorites. I'd rather see, rather than mandatory reporting, a duty on companies to prevent economic crime, and for that definition to include fraud. And I think that could include some elements of reporting when you find fraud, but also taking accountability and responsibility for putting in place preventative detective measures. Lastly, perhaps, if we do end up with mandatory reporting, why don't we just build on established means such as CIFAS, so at least that data is available to help the reporting organizations get preventative benefit? Experience dictates that reporting into the police or the National Crime Agency has been a one-way flow of information and intelligence. Some would say a black hole, but certainly reporting organizations and companies get little value from the bureaucracies that have been set up to report into such bodies. So if there is mandatory reporting, who to, and why, and what benefit is there for the organizations that report? So there are my probably 6 points. I thought I set off with 4, but there are probably a few more than that.
Probably 84 actually, Mike, there. But thank you very much indeed. Really, really interesting. And don't forget, folks, if you want to get your questions in, please do use the question and answer button at the bottom of your screen. When we've heard from the 3 panelists, we'll come to your questions. Thank you very much indeed, Mike. Well, let's go to Lee. Lee, your opening statement, please.
Wow. I was quite surprised at the topic, as in compulsory reporting. As a bank, we already report about 6 or 7 different types of report to different areas. And I was thinking, like, well, hang on a minute, are we not already doing enough reporting in the financial sector? So if we take, UK finance of late, especially since scams and APP type activity has kind of like gone wild, the amount of collecting of data around scams from the UK finance. So currently banks have to report to UK finance the different types of scam typologies. We report to action fraud. We report to, under the recent PSD2 regulation, all banks have to report under what we call the REP 0117 reporting. We've got SARS reporting, as Mike did too. We've got CIFAS reporting, but we also had under the Prices of Crime Act 2002, there is a regulatory obligation for all banks to report confirmed fraud. So what on earth is happening with all that data, and how much more do you want? So from a bank's point of view, this is becoming a bit of a cottage industry. So it only like, well, sometimes it's a repetition of the data, but sliced and diced in a different way. So from a bank, my view is like, why do you need all this data for? Surely you've got it somewhere, and why is no one's talking to one another? So you've got all the information between the 6 or 7 organisations. You've got an awful lot of MI there and data, but I don't know what the hell you're doing with it. So that's my view, is that you don't need any more. So
okay, thank you. Well, thank you very much indeed. Well, I'm sure we'll come back to you there on that one. Without further ado, though, I think what we'll do, we'll go and hear from our third panelist. And David, your opening statement, please.
Thank you, Martin. Well, we're going to get a fairly consistent view, I think, here this afternoon. My initial thoughts about the question was, what for? What are the purposes of obliging companies to report instances of fraud? And for pretty much the same reasons which have already been expanded. I see possibly 2 purposes. The first purpose is to initiate some kind of enforcement investigation and action. And the second is for measuring purposes and research, and so that we can get a better handle on the vulnerabilities of organizations and the threats that emerge into organizations, etc. So for research type purposes. In that first category, enforcement, I think already Mike has mentioned, well, what's the point? So the reports go into the black hole of action fraud, and very little pops out over the back end. Since action fraud has been in place, the number of offenders brought to justice has crashed. It's now 50% lower than it was just a few years ago, around about 10,000 a year. So the purpose of action fraud in terms of meaningful outcome doesn't seem to have transpired. And then for measuring purposes, well, I love data. I love counting things. I love analysing that kind of information. So personally, yes, I would love it. I'd love to have it. But from a practical perspective, it doesn't seem to be an appropriate way to measure the fraud threats to businesses. Because as we know, detected fraud is a tiny fraction of actual fraud. So if we relied on that data, we'd be deluding ourselves. And I think there are better and alternative ways to get at that information if that's what we are after and that's the purpose.
Okay, thank you very much indeed. Well, I enjoyed that. Let's just me ask each of you this question. Let me put it to you three, this point to start off. You've missed the point. And the reason why we need it is because in companies, shareholders have a right to know. And their judgment on whether to invest or not, for members of staff, whether they're in a credible company or not, depends on them not putting reputation first, not putting other factors first. It's about getting the facts right. And we know that some don't do this. We've all known for years that it's sometimes brushed under the table. So to account for this, we have to take action. And unless we make it compulsory, and unless there are penalties for doing so, that's not going to happen. Mike, surely I'm right.
I certainly think that the importance of an anti-fraud culture for any organisation is highly important, and that leadership from the top about setting the tone. I'm not sure that such a method would create that anti-fraud culture within organisations, and whether just the mandatory reporting, which could be put in some area of the financial part of the business, would create that mechanism for people to be aware of fraud and to be doing the right things from the top. As I said, look, my preferred route for that about a duty to prevent economic crime, I think we've seen that with the duty to prevent bribery and corruption as being a method that brings in training around knowledge of what bribery and corruption risks there are in the business and making people aware of that, around having mechanisms in place to combat bribery and corruption is a better route to go down around fraud and wider economic crime than purely a narrow reporting, mandatory reporting function.
Okay, I'll come back to that in a second. Let me just come to you. This principle, though, the only way we can really protect the bona fide and the reputation of the whole economic system is by making it compulsory, because it's the only way we're really going to get that understanding. And it's not just about numbers and research, it's about credibility for the system. Lee, have I got a good point?
Yes and no, because the underlying thing that underpins detection of fraud is data. Now, just having mandatory reporting isn't going to solve the problem. And having data and sharing that data is key for this. I think, as more banks are looking at consortium data nowadays to kind of like have a joint effort, rather than everyone doing their own thing in silos, we're more powerful as one. And this, you can actually do a read across all the industries. Like if you take benefit fraud, what is the difference between benefit fraud and banking fraud? Because ultimately it goes into the criminal's hands. So having that data sharing capability for me is key in all of this. Now, then you look at, well, what's stopping us? So when we look at legislation like GDPR, data privacy, etc., that's seen as a blocker today in terms of why areas can't share information, sectors can't share information. And just to make a point, I believe that even if you take the NHS, each NHS area in regions, I can't remember what the term is, they're not allowed to share data, even though it's part of the NHS. It's that inability to share data even in the same organisation. So actually, is there a fundamental question? And I'm sorry if I'm reversing roles here. There's a fundamental question, is that are we being stopped in data? Is someone stopping us from detecting more fraud because of that red tape that we can't get over?
Okay, you're nodding there, David. I'll let you just comment on that. Then I want to come back to you with a slightly different question. David, you want to just say why you're nodding?
It comes back to, I think, what your question is really about transparency, Martin. It's about creating transparency of the vulnerabilities of large organisations, let's assume, and whether they've got a grip on how they're managing the business and whether they are losing a lot of money to fraud or even to error or other things. And I think that transparency question is a useful question. And there are other ways to resolve the transparency question other than to compel people to, or businesses to report instances of £20 expense fraud to action fraud. It'd just be a waste of time. And I know in other areas, at least mentioned in banking, but I know in insurance, for example, where they do reporting, they report their figures, their statistics annually to the ABI. I know that the people who are putting this data together get anxious about the data because they can't distinguish between fraud and error or something else. So there's chatter amongst the people who put this data together. How are you doing it? I don't know, how are you doing it? And so what we get with the aggregate data is lack of confidence in that data, because the raw data is not precise enough, and the definitions are too loose, and people don't know how to interpret them. But nevertheless, it creates some kind of transparency in the insurance sector. We have the National Fraud Initiative, which is a great idea, which comes back to what Lee's talking about, which is the data sharing. And I've had the privilege to see how some of that data sharing is used and the output from that initiative in government bodies, and how there's a small number of government bodies who embrace the NFI and its value and what it can do for them. Another bunch that aren't interested in it at all. And another bunch in the middle, the window dressing folk who just tick the box. And the result is that a minority of government bodies actually make use of that data. So it's an expensive exercise. It could be a useful exercise, but the implementation is nowhere near where it should be. So it comes back to what's the purpose. And I think there are better ways, which might come on to, in creating the transparency that you're looking for, Martin.
Okay, fair enough. Thank you very much indeed for that. Well, let me just come back to something Mike said. Then I'll come to you straight after, David, if I might. Mo Jackson was talking about the offence of bribery and what's happened there. And Mike, you seem to be saying that there is a model there that could be replicated. Could you just give a little bit more detail about what you've got in mind? And David, let me come back. You're looking at bribery. I would like to get your response to what Mike's got to say. Mike first.
Yeah, I think on the broader issue around a responsibility of all players in the marketplace to reduce economic crime, to take actions and being held accountable if they haven't done enough. I'll give an example, say recently, British Airways has a data breach and loses lots of personal data, credit cards. Where's the fraud loss? The fraud loss is with card issuers. Yeah, they suffer the fraud. So they would then be reporting the fraud loss, which is not their fault, in effect. So, and what's the onus on British Airways to put in measures, or anyone who has a data breach, for example, to mitigate the fraud losses? We look at across a whole set of enablers, whether they be accountants or solicitors, for example, in different types of fraud, mortgage fraud, for example. What do they have to do? They're not the end loser. The mortgage company is making the loss in those areas. Again, the mortgage companies will be reporting on losses which are facilitated by other enablers within the marketplace. So where is the spotlight on organizations which create fraud problems? Because they're not the losing organizations. The solicitor's firm, if the solicitor is found to have been helping facilitate a mortgage fraud, loses a solicitor maybe if they go to a disciplinary tribunal, but they don't suffer the cost. So I think it's looking at, they are facilitators and enablers who should also be held to account. I think the people who lose money generally, because it's a business loss, invest millions, if not hundreds of millions of pounds in fraud prevention measures, new technologies, biotechnology, all types of biometrics, always quite at the cutting edge actually of trying to reduce fraud. But it's only part of the ecosystem, is those who are at the end picking up the tab. So I think when we looked at bribery and corruption, it's broad. It's looking at how do you create a culture. It's about training people up to recognize that within an organization. It's putting responsibility on organizations themselves to take measures to be able to reduce that threat. Why don't we have something similar for the broader economic crime and fraud issues? That's my, if we're going to call for a law change, if we're going to get the evidence together, rather than this narrowness, which I expect of mandatory reporting, it may well be that reporting is part of that suite. How do you, as a business, prove that you've done everything you can to reduce economic crime? Well, I would be looking at, as to point to Lee's point, I share data through established means. I train my staff. I put in processes and systems. And maybe I also report when fraud happens to the methods that we have, action fraud or whoever. So, I mean, it's part of the issue, but I would say, well, I'm doing everything I can, as you would do in bribery and corruption, because otherwise you can get prosecuted for not for not doing what you needed to do to reduce that risk. So
Okay.
we come back to this before, but I think it might be time when you say, well, how do we change this dynamic in the UK around really taking fraud seriously? Did we do that with bribery and corruption? We did to a certain extent. Not enough prosecution still. You know, the elephant in the room is there enough money going into trained investigators in policing and the CPS to actually make a deterrent? Another question, I agree, but you know, we can fiddle in putting loads of buckets more fraud reports in, but if at the far end we've got nothing going on or little going on, then we're not addressing the big issue, Martin, of what's the enforcement response. So I think that is a big question, but you know, we shouldn't always dodge around that because we believe there's no money. Can I be controversial here? The last year and a half has shown that there is a magic money tree when you need it. You know, you can spend billions of pounds on a billions pound problem. You know, this is a £100 billion problem, fraud, and we spend, I don't know, hundreds of millions of pounds on policing fraud. Maybe not even that amount.
Okay, very, very interesting. David, do you agree with Mike?
Yes.
Now, but do you? I mean, look, you studied bribery from a slightly different angle. I mean, it isn't right to paint this as the solution, in my view, Dave. Let me just pick this up, because quite clearly this hasn't led to any dramatic improvement in bringing people to justice. I mean, the prosecution is so minuscule. Forgive me, it's just not an example, is it?
No, this is true. But what I do think happens when you introduce that kind of legislation, it does make people think and reflect on what they're doing. And then, as I kind of like mentioned earlier on, you will get some organisations which will embrace the new regulations. They will implement them with full gusto. You will get other organisations which will ignore them. And you'll get another bunch of window dressing guys somewhere in the middle who do the tick boxing and the PR. But you will get organisations who will embrace those regulations, and they will do something. Now, the outcome of those organisations doing something is invisible to us all, because we don't see what the impact is. We don't see that less bribes have happened. No one's measuring it. It's very, very difficult. And the same would be for fraud. We wouldn't know if we were to mandate a similar situation for fraud. We wouldn't know what the impacts were. But I do think some kind of legislation like that does have, can have a positive effect. The downside, which I think we have to guard against, and this comes back to whether we should oblige the reporting of fraud, is you get another revenue stream for the consultancy houses, for the PwCs, the Deloittes, etc., who can charge thousands of pounds per day in order to help businesses with their compliance. I would rather see that money pumped into doing something useful, pumped into finding out actually how vulnerable are businesses. Let's do a great big exercise. Rather than pump all this money to PwC and Deloitte and their compliance exercises, why don't we do a great big exercise and find out how vulnerable organizations are? In America, they have the, I think it's the Improper Payment Act, where they oblige federal agencies to measure the level of fraud in those agencies. We do quite a lot of that in the UK. Why don't we do some of that in businesses? Measure it, not report it, measure it. And if we measure it, that could go into your annual statements, financial statements, etc. Let's find a way to measure it. And there are ways to measure it, I think, which are economic, but don't just shovel money the way of PwC.
Interesting. Okay, thank you very much indeed, David. I'm going to move on, and I'm going to come to you first, Lee, with this question. It's from Keith Ditcham. Now, Keith has just done a major study actually on fraud, which has attracted quite a lot of attention. And he says we're talking about the wrong question. He says, shouldn't we be saying, should fraud investigation be made compulsory, The idea being that the law enforcement response is so inadequate that we should be focusing on those we already do know about, and there should be some sort of compulsion to investigate what comes before. How would you feel about that, Lee? That might keep you a bit busy over there in your bank.
It is. You're almost, if I'm understanding the question right, you're asking us to step in the shoes of law enforcement and doing their work for them.
Well, it's your problem. It's your problem. I mean, it's your bank, it's your fraud. I mean, is it unreasonable to get you to take responsibility?
So we have our own in-house investigators, but I think it's the sheer volume. You can't get to everything. In the same way, we don't expect, the Bobby on the corner of every street. We simply, it's a resource issue. If we had less reporting to do, perhaps, because like I said, the cottage industry, just on reporting, it's almost like, that resource, time and resource could be better spent elsewhere in terms of stopping the fraud and detecting the fraud.
Yeah, interesting point. Interesting point. So you did make your point in your opening statement about the amount of time this takes and the amount of effort. I mean, do you think constructively, Lee, that could be better directed? I mean, have we got to a state of compliance madness here at the expense of what's really important?
Well, if I said to you, in terms of cost, it must have cost all the UK banks billions just to implement PSD2 requirements to combat fraud. And it's almost like, until you see it, you wouldn't believe it, how much work and effort and money has gone into recent regulatory compliance just under PSD2. And under the PSD2, there were a lot of requirements pertaining to fraud that all banks had to adhere to. And that itself, we're still not finished yet. And before you know it, there'll be a PSD3 and so on. And going back to Mike's point about, accountability for areas that lose data and then it results into losses to the issuers. Well, that's a really important point there, because the fallout of that is the banks get the kind of like bad press for not containing stuff. Actually, we're not the ones that lost the information. So the intrinsic value behind that is not just about a card number or some customer data that's gone missing. It's the full impact of that. It's the replacement of that card, that inconvenience in that client. And actually, under PSD2, to enforce the step-up authentication, the strong customer authentication, that affects our customer journeys. Because the more fraud you have, the lower your threshold that you've got to apply that control on. That will impact the client. So every time you've got to do 3D secure, etc., a lot of that is based on what the fraud turnover is for organizations. So the higher your fraud loss, the lower you've got to go in to put those controls in and inconvenience that client. And yes, that's not fair, because we weren't the ones that lost the data.
Okay, interesting point. Mike, I'm going to come back to you. Mike, I'd like to pin you down here. Right? So you're the hub of all these organizations that report their information to you. This is Keith's question. What we should be saying to them all, thank you very much indeed for reporting, but don't think you pass in the buck. You go and investigate stuff that falls on you. It's the only realistic way forward. Public sector aren't going to invest. Let's get real here. Reasonable or unreasonable, Mike?
Unreasonable. Straightforward, because what you're saying is you're privatizing the policing of fraud in that effect, that we then have to have a shadow police force without the powers of policing to investigate fraud, without being able to arrest, without having to do surveillance and all the things that only empowered constables and police forces can do. Well, CIFAS was a response to the lack of policing and investigation of fraud in the first instance, when the credit industry came together and said, were policing and said back, we can't investigate all this, you've got to do something. So it's about a consortium of fraud, which then helps to prevent further fraud happening. And I do agree with Lee that we should go further with what consortia of data across banking, but also across other industries, which will help to prevent and detect fraud. But maybe I can come back with something else, Martin, because I think that perhaps we're kind of falling into a little bit of a trap, and I think we do quite often when we talk about fraud, as if it's just homogenic. You know, it's like crime. We're going from corporate frauds, many billions, through to an individual abusing their credit card, for example. Yeah. So we've got volume fraud at one end, which I think is dealt with, but in terms of reporting, that comes into CIFAS, goes to the National Fraud Intelligence Bureau. We have scams, that's reported both through FIS data, UK Finance, and through Action Fraud. Is it really talking about mid-range corporate frauds? You know, that whole issue of, does it impact on the materially on the accounts of a business, and whether you, as a shareholder, you should know about it as an investor? Is that where we're missing? Are we missing insider frauds? I think we probably are to a large extent. That's not reported. You know, I think if we're going to look at mandatory reporting, it can't be a broad brush of all frauds need to be reported. It's going to be like, where's the problem that is not being reported, and why is that not happening? I do think it is around the issues of reputational damage. It might well be about not putting them into the public realm because it damages investors' confidence, etc. So understanding where the problem we're reporting for is, and then, well, what difference would it make if we did put in a regime which made, say, mid-sized companies, where I believe there's probably a lack of reporting fraud, where they go, it's not worth, you know, maybe it's under £100,000. They think the police aren't going to do anything about it. They don't really want external parties to know, and it's put under the carpet. We know that happens, but what would be in it for them to report at the moment? You know, what would we create? So I think let's break the problem down, because I think corporate fraud, we've got serious fraud office, we've got whistleblowing, and at the volume end, I think we've got, you know, that's about prevention more than about investigation. But to answer your question, I think passing it on to us, we just create a lot of cost without the powers to actually investigate adequately.
Okay, David, I'm going to ask you a very quick comment on this. So I would like to get one final question. We're running out of time. Just this point about what's coming through is it's all very well reporting, but we need more action taken at the sharp end. If I could just summarize, David. And without massive investment in policing, which doesn't seem it's going to take place, and perhaps on a scale that would be impractical anyway, the only other realistic possibility is to say financial sector take responsibility for offences that fall on you and you're partly responsible for. What's unreasonable about that, David? Is Mike right?
I think there is reasonableness in asking people, if someone comes into my house and there is a crime committed, I think it's kind of reasonable that I do something about it and take some responsibility for it. And when a crime's committed on the premises of Barclays or anywhere else, I think it's reasonable that we expect Barclays to do something about the crime which is committed on their premises. I think that one of the big issues that we face with all this is the volume of fraud, and the fact that at some time or other, most people in their lives will have committed some kind of fraud. It's such a popular crime. I would borrow from, and I would turn myself slightly on the head and borrow from the cartel area, where phrases emerged there called hardcore cartel, which obviously means serious cartel. I don't know what the difference is between hardcore and not hardcore, but let's put that by the way. So they focus on hardcore stuff, and the regulators and legislators focus on the hardcore stuff, not the bits and pieces, not the expenses, not the £100 here and there. And we can also borrow from the big data technologists, and this would be certainly relevant to the banks. Big data technologists talk about the 3 V's: volume, velocity, and variety. If we drop variety, I don't really know what that means, and we think about volume, velocity, and value, I think we'll find, and I've looked at some granular data on this, that fraud has a particular distribution where a small number of frauds cause most harm, it's a bit like a very skewed Pareto. And I think if we use the 3 V's, if you like, of fraud, and set some thresholds on those 3 V's, and then say to Barclays Bank, right, when a fraud exceeds this 3V value, you must report it to the police. And then it shouldn't go into a black hole, and the police should be resourced adequately with their powers to deal with these high value 3V frauds. And that might mean getting another 200 police officers in the City of London Police or so.
Okay, David, thank you very much indeed. Listen, I can see this is generating a very good response. I want to ask you one final question. I'm only going to give you 30 seconds each, which seems... David, John, Mike, just before I come to that, can you very quickly, I want 10 seconds if you wouldn't mind. Malari Akajani, I hope I've said that right, it's just asked about trade finance fraud. And the point I think he's making here is just building on, we're not building up all parts equally. I mean, from your part of your part, that's right, isn't it? We aren't treating all parts equally. Just 10 seconds, if you wouldn't mind, Mike, so I want to get a final question in.
Yeah, no, I wholeheartedly agree with that. I think there needs to be strategies over different elements and sizes of frauds, because they have different modus operandi, they have different ways of going and have different targets. Yeah, you wanted 10 seconds.
Yeah, that'll do, because I want to move on with a final question. Headline issue. Lee, I'm coming to you first. You've only got 30 seconds each, no more. It's a big question. We want to do something dramatic about fraud. It's a major problem. We're all agreed on that. Headline issue, Lee, where do we go to get action on this? Headline strategic issue, single most important thing to do, Lee.
Data share for me.
Okay, but I mean, and this is back to the point that at the moment the impediment is legal requirements which make it difficult to share data.
Yeah, so data privacy, and any interpretation of GDPR wrongly or rightly, it's banks are saying, well, we can't share data. Okay,
David, headline issue. Just 30 seconds at the most, please, David. What should we be doing? How do we get a grip?
I agree with Lee, and the first step there would be very nice to see the banks agree on what the appropriate rules are. I know police officers work very well with some banks, and they struggle with others, and yet apparently the laws are the same. So let's get an equal interpretation of the law between all the banks.
Mike, I can't see you're going to say that sharing data is a bad idea. What would you put as the big issue though, Mike, from your point of view?
Yeah, clearly utilising the resources you have, whether it's a National Data Exploitation Centre or CIFAS, to bring or FIS and bring this data together, and that will make the biggest impact if we can get that. Secondly, I'd say let's put proper money into fraud policing. And thirdly, I'd say about that duty to prevent economic crime has been the legal gateway for addressing some of these issues.
Thank you very much indeed. And maybe that last point, Mike, is forms a thought for another webinar going forward. Panel, fantastic. We could have gone on. There are so many issues here that are cropping up, and we will return to it actually in the future. We've got a survey actually that's going to be done very soon. So I'll be inviting you all to take part and give your views on this very, very interesting, engaging topic. Thank you. I enjoyed that. Finally, just a few final comments from me very, very quickly. Just to say the Oscars nominations are open in the Benelux. They close on the 4th of July. Thank you to Babak there, to Germany, sponsored by Team Software, Kenya, Romania, US, also sponsored. They close in the US on the 1st of July. Thank you very much indeed to Babak and Team Sponsor. And Tekka nominations, they are now open. The Tackling Economic Crime Awards, they are open in the UK. Get your entries in now. We want to know who are the best organisation tackling economic crime. Just so you know also about the cyber Oscars, these are the categories worldwide here. Who are the outstanding performers in cybersecurity? Let's get the focus on this and let's get the entries in. Cybersecurity fundamental to all types of crime, not least economic crime. Who are the outstanding performers? Next, please, to say that we're going to be back going through it all over again on Thursday, when the topic of the webinar are going to be the challenges posed by responding to radicalization. Where are we with that? We've been hearing about this problem actually with regards to radicalization getting worse. in previous webinars because of lockdown, but it's been happening under the radar. We'll be finding out more all about it on Thursday from 3 experts from different parts of the world. So thank you once again to my panel. Fantastic. Thank you once again to you, the audience, for asking questions. Don't forget, a copy of the webinar and a blog will be on the website tomorrow. Hope to see you again. Hope it'll be Thursday at the same time, wherever you are in the world. Until then, stay safe.